going to have a discussion on this MTP with respect to our GST. Already you know that GST will be of 50 marks, and just like the final exam here also, MCQs were given. If you observe this particular MTP, then first MCQs division A 15 marks, and whereas the remaining 35 will be of descriptive. So here one case scenario will be given. Already you know this. This will be a mixture of different chapters here. And see how many questions, 3 into 2, 6 marks. With respect to MCQs mark. So with respect to MCQs, if you observe case-based study 1, Future Insurance Limited is an insurance company providing life and general insurance services across India. The company has been carrying on its business for the past 3 years with approval of IRDA. Future Insurance Limited secure its business through various insurance agents spread across India. Those agents includes individuals, partnership firms, LLP, private limited companies also. However, all of them are licensed under Insurance Act. The company avails the services of renting of motor vehicles for its employees in Pan India through RR Travels Private Limited, where the cost of the fuel is included in the consideration charge, that is, it may be RCM concept. The service provider charged 5% GST, that is RCM, and informed the company that it claimed the IDC only in respect of same line of business. Okay. And some details are given. This with respect to the main business is insurance, premium received on Pradhan Mantri Jan Dhan Yojana, Aam Aadmi Yojana, some exemptions can be there. And it is a micro insurance, and premium received on reinsurance of group personal accident policy for self-employed women, premium received on fire and special policy of various business units, premium received on money back policies. And these are the details, some details are given like that. Future Insurance Limited received the following supplies in the month of May, and the details of GST paid on such supplies are as follows. GST paid on the purchase of the car for use of managing director 5 lakhs. General IDC is not allowed on this. GST paid on the bus. Seating capacity is more than 13. Therefore, IDC can be availed. And next one is GST of 80,000 were paid on general insurance taken from MT Insurance Limited for motor vehicles for the transportation of the person. Seating capacity less than or equal to 13. Then IDC is not allowed on this. That means whatever the amounts that are given exclusive of taxes, and the aggregate turnover of the company is not less than 10 crores for the past 3 years. Some points are given. Based on that, we need to answer the 3 questions here, 1 to 3. Determine the services on which the company is liable to pay the tax under reverse charge. So that means in the above total scenario, if you observe here, so what are the services that are given? Services availed from insurance agents, services availed from RR Travels, none of the services or both of them. See 2 points. See, he is a body corporate. With respect to renting of motor vehicles, supplier is other than body corporate, then RCM can be applied. But here is a body corporate, therefore in this case RCM cannot be applied. But whereas with respect to insurance agents to insurance company, in those cases definitely we can apply the RCM concept. Therefore insurance agents concept is covered under RCM. That means point A is the answer for this. And RR Private Limited is a body corporate, therefore RCM cannot be applied in those cases. Next one. Compute the total value of taxable supply made by the future insurance company for the month of May. I think with respect to Pradhan Mantri Jan Dhan Yojana, it is exempt. And in the same way, this one is also exempt. So remaining amounts, if we add 12 plus 7, 19 plus 1, 20 plus 3, 23. So definitely this 23 will be taxable, ma. So for the taxable value will be 23 lakhs here. See this? 23 lakhs is the answer here. Okay. Now third one is the amount of IDC that can be claimed by this future insurance company, ma. We need to check the inward supplies. On the car, IDC is not allowed. So technically 3 lakhs is actually allowed, ma. But whereas because based on this particular third one, 80,000, if the seating capacity is less than or equal to 13, IDC is not allowed generally. IDC is, unless you are there in the insurance business now. So generally IDC is not allowed. But then on the insurance, repairs and maintenance, on these services, if on the motor vehicle IDC is allowed, on the services IDC is allowed. But there are two exceptions. If at all you are a manufacturer of that particular motor vehicle or you are in the business of insurance, in those cases IDC is allowed. Based on those points, 80,000 definitely we can claim the IDC. So 3 lakhs plus 80,000, total 3 lakh 80,000 is the answer for this question, ma'am. So the major focus is here on the IDC itself. Next is case scenario 2. With respect to case scenario 2, Madurai Implex Limited, that is a company, is engaged in supplying of the sports good. The company did not opt for registration under GST. The proper officer under GST, based on the inquiry, finds that company is liable for registration and restarts the form on a temporary basis on 15th June 2023. Further, in the month of Feb, the company also generated an e-way bill for interstate transport of the goods. However, immediately on the generation of the e-way bill, the buyer cancelled the order before it were dispatched from the factory to the delivery. In the month of March 2024, since the company was incurred heavy losses, it applied for cancellation of GST on March 24. The order for cancellation was made on March 28, 2024, affecting the cancelling the registration with effect from 15th March. On the basis of the facts given above, choose the most appropriate answer, that is okay. The first question is, after the grant of temporary registration, Madurai Implex Limited needs to apply for registration within how many number of days from the grant of temporary registration? If no extension is granted, then what is the time limit, ma? 90 days. So once the temporary registration was given to you, the time limit to go for registration is 90 days, or you can go to the appeal. The company needs to file the final return by when the RC was cancelled, ma, here. What is the date of application? March 15th. What is the date of order of cancellation? March 28th. Whichever is latter date, March 20th. Sorry, March 15th or March 30th, whichever is latter date, March 30th. From that particular date, within 3 months, April, May, June. So, June 30th will be the date. Within 3 months. Date of cancellation or order of cancellation, whichever is latter date, from that particular date, within 3 months, you need to file that. Next one. Which of the following statements is correct in respect of e-way bill generated for the goods in the month of Feb for which the order was cancelled? Once generated e-way bill cannot be cancelled. E-way bill can be cancelled within 24 hours, 48 hours, 72 hours. 24. That is option is B here. Next one, ABC Insurance Limited received a proposal for pandemic insurance for cricketer tournament organizing by the Lions Club. Sum issued for the said insurance was 20 crores with a premium of 5 lakhs. The company issued the said policy on 1st July. Invoice was issued on August 5th. Premium was received on August 14th. What is the time of supply of services provided to Lions Club? So with respect to this, it is insurance now, banks, financial institutions, insurance companies like that. Instead of 30 days, 45 days is the time limit. So July 1st, from that particular date, within 45 days, if invoice is issued, then date of invoice or date of payment, whichever is earlier. So here invoice is issued within the prescribed time limit. Therefore, date of invoice or date of payment, whichever is earlier. What is the date of invoice? August 5th. What is the date of payment? August 14th. Whichever is earlier, August 5th. That is the time of supply. Mr. Naresh, a supplier of ready-made garment, issued an invoice to the customer and erroneously charged a higher value by 42,000. Such invoice was issued on March 28, 2024. Which document is required to be issued by the company in respect of the invoice issued on March 28, 2024? When actual value is more than invoice value, in those cases for the difference, a credit note is needed to be issued. So these are the MCQs. Now we need to see the descriptive ones here. Question number 1 is compulsory. Attempt any 2 questions out of the remaining 3. Ms. Rhea, a proprietor of Happy Enterprise, registered supplier of taxable goods and services in the state of West Bengal, pays GST under a regular scheme and it is not eligible for any threshold exemption. It provides the following details with respect to December month. These are the outward supplies. Intrastate supply of the goods to reliable sons. Intrastate transfer of the goods to its branch office in the state of West Bengal. Both are under the same GST number. Therefore, it is not a deemed supply, it is a stock transfer. Permanent transfer of old computers to the orphanage without consideration. ITC was not availed. If ITC was availed, it is a deemed supply. Not availed now, therefore it is not a deemed supply. Advance received for future supply of management consultancy service to Shubham. Oh, is he a supplier of the good or a supplier of service? Goods and services both are there, and consultancy service. With respect to services, whenever advance is received, then also you are liable to pay the GST. Therefore, you are liable to pay on this. Based on that, step 1, I think computation of output tax payable, we will make the computation. And step 2, computation of IDC. Any opening IDC was given in the problem? Okay. So no opening IDC were given, therefore this is step 2. Purchase of taxable goods from registered supplier, IDC is allowed on this. Works contract service for the repair of office building. Repair was debited in P&L account, therefore IDC is allowed. Debited to P&L account now. Avoid legal service from the advocate to represent the matter in the court relating to collection of dispute proceeds from the customers. I think with respect to turnover is, what is the turnover here? Exceeds. Therefore, he is a registered person and it is covered under RCM. Therefore, recipient is required to pay the GST. That means this fellow is required to pay the GST. Based on that, we need to compute the minimum GST payable. You check the answer. See, intrastate supplies. Therefore, CGST and SGST, the rates are given in the problem here. See, with respect to goods, these are the tax rate. With respect to services, these are the tax rates. And branch transfer, it is not a supply. And permanent transfer, it is also not a supply because IDC was not claimed. And advance, definitely we are liable to pay the GST because with respect to services, advance was received. And with respect to services, 9% is the GST rate now. Based on that, the total output tax was calculated. And with respect to legal services, Under RCM, you need to pay the GST, but with respect to RCM, there is one speciality. It will be added to the output tax as well as it is allowed as ITC. Therefore, on that 50,000 service na, that's why this is ITC. After deducting this, some remaining amount will become, this is the amount we need to pay. Okay. So these are the output taxes we need to pay, 21,121. If you observe the IDC, on this intrastate purchases, IDC is allowed. Works contract repair, IDC is allowed. Legal services, see, IDC is allowed on this. By adding all these items, 27,200 is the CGST, 27,200 is the SGST IDC that is available. We can use it to set off. See here, we are having excess IDC with us. Therefore, no GST is payable. But with respect to RCM purchases, RCM supplies when you receive, you cannot utilize the IDC. Whenever you are required to pay the GST under RCM, always pay by cash only. Therefore, you are having the sufficient IDC balance with you. This 4,500 is needed to be paid in cash. This is the story regarding this, ma'am. And this is the first one, and second one is here. Renuka Sales, a registered supplier, receives 100 invoices for the inward supply of the goods or services involving GST of 10 lakhs from various suppliers during the month of Jan. Okay. Out of 100 invoices, the details of 80 invoices involving GST of 6 lakhs have been furnished by the supplier in the GSTR once and has been duly communicated to the recipients of such invoices in GSTR 2B. Compute the IDC that can be claimed by Renuka Sales in the GSTR 3B for the month of Jan, which is going to be filed on Feb 20th, assuming that GST of 10 lakhs is otherwise eligible for ITC. So, how many number of supplies that are uploaded by the supplier in GSTR 1 and reflected in GSTR 2B of the recipient, up to that extent only we can claim the ITC. Based on that, see, 6 lakhs or the 80 invoices are furnished in GSTR 1 and the ITC involved therein is 6 lakhs. The ITC that was reflected in GSTR 2B is also 6 lakhs. Therefore, you can claim ITC only on the 6 lakhs. On the remaining 4 lakhs, you cannot claim the ITC in the month of January. But whenever the supplier uploads those invoices, definitely we can claim the ITC. Okay. Next one. Comment on the taxability or otherwise of the following transactions under GST law. Also state the correct legal provisions for the same. What is the thing we need to see? Comment taxability. That means whether it is taxable or not. I think it is based on exemptions. Services provided by the private transport operator to the Vintage Girls Higher Secondary School by way of transportation of the students to and from the school. Transportation services provided to school, definitely it will be exempted. Services provided by way of vehicle parking to the general public in the shopping complex, generally it is not covered under any exemption notification. Therefore, it will be taxable. Food supplied by the canteen run by the hospital to the inpatients as advised by the doctor, yes, exempt. Because it is outsourced to somebody else, it may be taxable. But the canteen is run by the hospital, therefore definitely it will be exempted. Next one, Resident Welfare Association in a housing society registered under GST collects the maintenance charges of 6,500. It is more than 7,500, then it will be taxable. Less than, therefore it will be exempted. See, exempt. Transport service to school, parking taxable, hospital canteen to the inpatients exempt. The maintenance charges less than 7,500, it is exempt. Okay, ma'am? So the next one is state the person liable to pay the GST in the following independent cases. That means I think they're asking about whether it is FCM or RCM. So regarding this one, state the persons liable to pay the GST in the following independent cases. Legal fee is received by Abhishek, an advocate, from Navya Trading Company, engaged in making the taxable supplies and located in Maharashtra, having turnover of 50 lakhs in the preceding financial year. Service is legal service, supplier is advocate, recipient is Navya Trading Company. I think the turnover is more than that. Therefore, RCM is applicable. Navya Trading Company is liable to pay the GST. See this? Okay. Next one is Padam Srivatsav, an independent director appointed in accordance with the provisions of Companies Act. 1/4 Private Limited has received a sitting fee of 1 lakh from 1/4 Limited for attending the board meetings. I think it is covered under RCM now, being independent director, and the company is liable to pay the GST. One lakh sitting fee to the independent director, definitely it is taxable under RCM. Recipient, that is 1/4 Private Limited, is liable to pay the GST under RCM. Right Oils, an unregistered entity located in UP, is engaged in the supply of mission oil and high-speed diesel during the month of April. It supplied the mission oil in UP amounting to 15 lakhs. Also, it supplied high-speed diesel oil in UP 10 lakhs. Further, it supplied mission oil in Punjab from its branch located in Punjab amounting to 10 lakhs. Above mentioned amounts are exclusive of GST. Determine whether the right oils is liable for registration. Where it is located? UP. I think UP is making supply of the goods or supply of services, ma? Mission oil, high-speed diesel oil, diesel. I think be supplying the goods, I think. Then if the turnover is more than 40, definitely is required to take the registration, ma. We need to check it. See, mission oil 15 lakhs. High-speed diesel oil is also includable. Yes. While computing the aggregate turnover, taxable supplies, exempted supplies, exports, deemed supplies, all these minus GST, minus RCM purchases. What is the amount we will get? It is called as aggregate turnover. It includes branches also. By adding all the three, what is the aggregate turnover, ma? 35. But if at all you are making supply of the goods in UP, the registration limit will be 40 lakhs. The threshold limit was not exceeded now. Therefore, registration is not required. Now the second question. What will be your answer if the right oil supplies the high-speed diesel in UP in the capacity of agent of Central Oils Limited, non-registered, where the invoices to the customers are issued in the name of the right oils? What would be your answer if Central Oils is a registered entity? So here, ma, if the principal is unregistered, agent is also not required to take any registration. Therefore, even though he is acting as an agent, invoice is not required. See? Whenever you are making non-taxable supplies, ma, then you are not registered under GST, na? Because it comes under what they are actually supplying there. High-speed diesel is a non-taxable supply. So therefore, principal is not liable for any registration under GST. In those cases, definitely the agent is also not required to take any registration. See. In both cases, the agent, right oils, is supplying the non-taxable goods, na? Therefore, they are not required to take any registration. Okay. Next one is determine whether the supplier is in the following cases are eligible for composition levy under 10(1) and 10(2) of the CGST Act, provided the turnover in the preceding financial year does not exceed 1.5 crore. Okay. Shyam Enterprises is engaged only in trading of pan masala and is registered in the same state. Manufacturer of pan masala is not eligible for composition schema. Trader is eligible. Sahaj manufacturers registered offices in Punjab and Haryana and sells the goods manufactured by it in the neighboring states. When you are making any interstate supplies, you are not eligible for composition scheme. Therefore, in the second case, they are not eligible. See. Trading of pan masala therefore is eligible, and interstate outward supplies are there, such manufacturer is not eligible. That is the answer, ma. And fourth one, an unregistered person, Mr. Papan from Faridabad, travels by Air India flight from Pune to Delhi. That means it is a B2C supply and gets his travel insurance done in Pune. What is the place of supply of insurance service? With respect to insurance, if at all it is a B2B supply, then the registered place, B2C supply, address on record, I think Pune will be the place of supply. Sorry. Okay, where is the location, ma? Okay, even though it was done in Pune, where is this location? Sorry, yes, Faridabad. Therefore, Faridabad will be the place of supply. B2C, that means address on record is Faridabad, no? So, concept okay, but I thought that he was from Pune. But Faridabad is the place of supply, because if it all it is a B2B supply, registered place, B2C supply, then what is the position, ma? Address on record. That is Faridabad will be the place of supply. Next one, GST is payable on advance received for the supply of the goods and services taxable under FCA. Do you agree with the statement? Support your answer with the legal provision. Generally, ma, whenever advance is received, if the advance is received in relation to the goods under FCA, then you are not required to pay any GST. If we receives advances with respect to services, definitely we are required to pay the GST. Advance in relation to goods under FCM, at the time of advance, we are not required to pay any GST. With respect to services, even when we receive advance, we are required to pay the GST. Therefore, the statement is not valid, ma, because they are using the word goods also. Next one. All, see, you can check it. This statement is not correct. While GST is payable on the advances received for services or taxable under FCM, the same is not payable in case of advances received for supply of the goods taxable under FCA. All the taxpayers are required to file GSTR1 only after the end of the tax period. Examine the validity of the statement. Generally, this month GSTR1 will be filed on or before next month 11th. But this month GSTR1 cannot be filed in this month. But for that, there are two exceptions. One is CTP when his business is closed. Second one, RC cancelled person when he receives acknowledgement from the department that a proper application was filed. In those two cases, even though it was in the same month, GSTR1 can be filed in the same month itself. See, that is the answer it will be. CTP of the closure of their business, cancellation of GST number. In these two cases, the GSTR1 can be filed in the same month itself. So, this is a MTP. If you observe this entire MTP here, ma, in our GST keep focus on theory also, because majorly theory can also be asked. In the GST portion, ma, we're not talking about income tax. So, that's why keep focus on this particular GST theory part, and read the MTPs once, because sometimes the weightage will be there to the MCQs more than the imagination you have. So, please read this MTP, and any doubts are there, refer the video and check it once.